Good morning. Welcome to another Innovation Fund webinar. I'm very happy to be back with you. We have a very rich agenda today for you to support you in your application for the second stage of the Innovation Fund of our first call. I will therefore be very brief in my introduction, so to have enough room for our colleagues to present all the more technical issues that are, of course, of big interest for you to finalize your applications for the second stage. On our side, we are back in full force. So it's, of course, us at DG Climate Action, but also our colleagues from CINEA, from the executive agency, who won the implementation of the Innovation Fund. Then also our colleagues from the Joint Research Center, who help us on the calculations of the greenhouse gas emission avoidance, and the consultants from ICF, who support us both on the relevant cost as well as on the greenhouse gas emission avoidance. So we should be all there to reply to your questions. So what I want to do very briefly in the beginning is to tell you what you can expect today and what you cannot expect today, and give you a little bit of an overview where we are in the process and what's happening over the next weeks and months. So, what we want to start with is, of course, with the big news, with the big new item for the second stage, and this is the relevant costs and the cost efficiency. So we've lined up for you a very detailed explanation on this. We have some new tools, how you can calculate the relevant costs, how this will be easier for you. I think we have a Roman from DG Klima will start off, and then we have Gregor from ICF, who will really offer you a deep dive into these cost issues and how to calculate. Then we move on to other criteria. So degree of innovation, where we will explain you what changes from the first stage to the second stage. Then we have another new criterion, which is scalability, including knowledge sharing. So what is the market potential of your project, both in your sectors, across the whole economy? What is the impact on the competitiveness in Europe? And there are all these aspects of our global leadership in these technologies. And then we have an update on the greenhouse gas emission avoidance, because there are also some small changes compared to the first stage. And it will be Maria from DG Klima, and I think Laura from ICF, who will guide you through this. And then at around 12, Robert Kutschalt from INEA will come in and give you some more guidance on the administrative procedural issues, and then I will conclude. So, just to let you know where we are in the whole process. We have two calls ongoing. The one for small-scale projects for 100 million, and then the other one for the large-scale projects for 1 billion. Just quickly, maybe some of you also are interested in the small-scale projects. So there, we just passed the deadline for the submissions on 10th of March. We are busy looking into all the projects, organizing the evaluation. As we speak, this is starting over the next months and weeks, and we hope that by August we can already present you results, and then also consult the member states on that. And then very soon already inform the winners of that call, and then already prepare ourselves for the launch of the second call for small-scale projects in the fourth quarter. Okay, with the call for large-scale projects, we had on 23rd of March, we had a very big milestone. So we informed about the results of the first stage. We invited the 70 best projects to the second stage. We informed those projects that we consider that could be helped by a project development assistance by the EIB, and then also sent the evaluation report to all not yet successful candidates of the first stage. But we hope very much that this report will be very helpful for you to further develop your project, and of course to come back to us. So, I mean, we really see, and I think this is really so exciting for us to see the high number of good projects that we have, and we really have a very good project pipeline up here, and it's all our I think our common endeavor. How can we finance them as quickly as possible to get the best ones to the market as soon as possible? So what will happen next is, together with the EIB, we look at the projects for project development assistance, and we would hope that very soon, May, June, we could already spend our first money on that and offer project development assistance to around 10 to 20 projects. Okay, then what we are mainly here for is getting ready for the submission in the second stage. So for our 70 best projects, the submission should happen until the 23rd of June this year. Then we go into the evaluation and would expect by October, November that we can give you the results. And then immediately afterwards, also in the fourth quarter, we can launch the next call, the second call for large-scale projects. So that's a bit of an overview where we stand. As I said, we will not answer all your questions today, but we keep some for our next workshop on the 28th of April. So while today we really want to focus on the technical work to really guide you what you need to do for the application, on the 28th of April, we want to take a little bit of a bigger view, and also for broader interest, also for investors, stakeholders, we want to give an overview on the applications for the second stage. So for the 70 best ones, which technologies do we see there? How does it compare with the first stage? And we will present you some lessons learned from the first stage. So kind of best practices. What did our evaluators like very, very much? What is the quality of these projects? And maybe also to tell some don'ts. So maybe some like, okay, let's call them common mistakes that were made and that should be avoided in the future. So a little bit of a broader guidance there that should be of general interest. And then also for the application on the small scale projects, we also want to look a little bit deeper into the types of technologies that we got, and also in the same way we did it for the large scale and for the call for large scale projects, give you an overview of the technologies, what is out there, and also what we see up to now. Here there are very interesting projects in there, and we want to talk a little bit about it to the extent that we can do to our data protection and confidentiality rules that we have to apply. And then also on the 28th of April, I also really want to give you an overview or an outlook, an outlook on our next calls for the second wave of calls, both for the large scale as well as for the small scale projects, and how we want to do them, when we want to launch them in the fourth quarter of 21, and the types of procedures we want to apply. And I think we also want to reserve then a little bit of time for questions next time. So everything we cannot deal with today, we would have a little bit of space on the 28th of April to catch up on that. But I think now it's a good time that I immediately pass over to Melina, so that Melina can explain you a bit more how we deal with your questions today through Slido, through your questions on the help desk and so on. So I really wish you a very interesting webinar. I'll be back at the end to conclude and then make the link to our next event. But now, without further ado, over to you, Melina. Thanks very much.
Thank you, Christian. Good morning, everyone. I just noted that on Slido we have over 480 people connected, which is great. Thank you very much for watching and for your interest. I see also you're very active in submitting questions. Thanks for that. Keep doing this. And let me try to explain how are we trying to answer your questions in today's webinar. So, as you may have noted, this time around we did something new. We gave the opportunity to submit questions to the Innovation Fund Help Desk by the 12th of April. And thanks very much to those of you who did so. We try to address the majority of these questions in the presentations of the speakers, of course, keeping them anonymous and as generalized as possible to preserve confidentiality, but at the same time trying to be useful to a wider number of applicants. So you'll see a lot of your questions already reflected in the presentations. For the questions that arrived after the 12th of April or were too technical or we didn't address in the slides, we may try to answer some while speaking today. And the ones that we don't manage, will receive a written answer by the help desk based on the usual help desk procedure, which you know. So these are for the questions received beforehand. For the questions received on Slido, we are monitoring Slido as always, and we'll be making the questions public so you can see them according to the different points on the agenda. So if you have submitted a question and you don't see it published yet, please don't despair and please don't submit it again. We are going to publish it once we are speaking about that topic. Of course, we'll try to answer as many questions as we have today, but also we want to give time for sufficient time for the presentations because they're very extensive, very useful and technical. And I think when following them closely and rewatching them, you get an answer to a lot of your questions. Already on Slido, we got two questions, whether the slides and the recordings will be available where and when, which we have answered. Yes, of course, on DigiClima website in a couple of days. You can rewatch the recording and you have all the slides for further reference. And last but not least, as Christian said, there are some questions which we won't start even to answer today. We have seen them on Slido, mainly concerning the profile of projects which have been invited to submit an application to the second stage. We'll try to cover as much of this ground as possible on the 28th. And today we really want to focus on the how do you fill the applications, how do you deal with the new criteria for the second stage, and all the technical things that projects need to know to submit their application. Of course, the help desk remains open and available as always. Please don't hesitate to submit detailed questions there. You'll get an answer in the usual time frame. We are, of course, trying to answer as quickly as we can, but also be complete and comprehensive and analyze the questions carefully. So this is for today, and without further ado, I suggest we pass to the relevant cost part of the presentation today, and I think Roman will kick on this. Thank you.
Thank you, Melina. Good morning, everybody. Very happy to be with you again. In this section, we will walk you through the project maturity, relevant cost, and cost efficiency criteria. We will update you on the differences compared to the first stage and on the new elements that we are providing for you to enable you to submit good proposals, good submissions in the second stage. Next slide, please. So, going directly to project maturity, as in the first stage, we have three sub-criteria: technical maturity, financial maturity, and operational maturity. This is, I guess, very familiar with all of you. Obviously, the difference in the second stage that we are very much looking to details. And in the second stage, this is it. This is your real presentation. This is what will or will not convince the evaluators. We have reflected upon feedback received from applicants so far. Therefore, I hope we have improved the documentation. We have improved the logic flow of the application form, and we have provided table of contents for the accompanying documents. So what you will see in your feasibility study template, we have provided the table of contents, which we are asking you to follow. This also allows the evaluators to have a more consistent and standardized evaluation. Compared to the first stage, please always highlight and explain very clearly any changes in your project submission compared to the first stage. And Robert will later on explain which changes are permissible, but be very precise on this. In the technical maturity, we will be looking whether your project can or cannot deliver the output as expected and whether you can avoid the greenhouse gas emissions as planned and expected. And you will see in the application form that we have slightly readjusted the questions, but please follow them very thoroughly and be as precise as possible. Again, also in your submission form, in application form, highlight and explain any changes that are different to the first stage. In the second stage, we are very much interested in looking into evidence. More evidence you can provide, more credible your presentation is. So please take due account of be consistent, be convincing, and provide as much evidence as you can. And again, for the technical maturity, if you have technical diligence report, please attach it to your application. Compared to the first stage, here in the second stage, we will also very much focus on risks, much deeper than in the first stage. So therefore, in the application form, you will see in section 4.4 the risk matrix, which we ask you to fill in. Focus there on the key technical risks and be very credible on how you are going to mitigate them. Be realistic, but be convincing with your mitigation measures. As regards the feasibility study, you will see in the new table of contents that we are asking you to be very detailed on the risk analysis there. So provide also the risk heat map in your feasibility study and provide as many information, as many details as you can in your feasibility study, while in the application form, in the risk matrix, focus on the key risks and key mitigation measures. Again, very important message here is the consistency of the presentation. Your presentation needs to be coherent, whether it is the application form or whether it is related to your accompanying documents. Next slide, please. In the operational maturity, the same messages as for the technical one. We have provided the table of contents for the project implementation plan to allow more consistent and standardized evaluation. Again, there, don't forget to highlight and explain any changes compared to the first stage. In the operational maturity, we will be looking into how credible your plan to implement the project is, whether it is sufficiently developed, whether it is comprehensive, whether it is realistic. So be very precise and think well through all your implementation steps. Be as detailed as you can, and again, underpin your claims with evidence. If you have a due diligence report, again, attach it to your application. And also in the terms of operational maturity, the project implementation planning, the project implementation steps, be very precise on the key risks related to the implementation of your project. whether this relates to permits, whether this relates to any other elements that may delay or endanger your implementation, and provide very clear and consistent mitigation measures in your project implementation plan, which need to be reflected in the risk matrix in the application form in section 4.4. Next slide. Okay, financial maturity. I think this is one of the cracking sub-criteria for the second stage. Here we have, again, slightly adjusted the application form, but we have also some novelties in the second stage. In particular, the financial model summary sheet, which is a mandatory document that you need to fill in and submit. This has been provided for you in order to be able to provide consistent information. So if you calculate your relevant costs following the template on the portal, you should also provide the inputs in the financial model that need to be coherent and consistent. And Gregor will walk you through the details of this in a couple of minutes. Going back to the business plan, again here, please don't forget to explain and highlight any changes compared to the first stage. The project may have evolved, the market may have evolved, the regulatory elements may have evolved, so please be precise there. We will look into financial maturity sub-criteria, whether your project is financially ready to reach financial close and whether it is likely to succeed on the market. Therefore, it's very important that your claims are consistent, that your messages in the application form, in your accompanying documents are consistent. For instance, if you are planning and providing your calculations, if you plot your cash flows, your revenues, they need to be underpinned and consistent with the evidence. Like if you calculate your revenues, please provide evidence that this is based on your potential future offtake contracts. Please provide the terms of those contracts. The same goes to your CapEx. Please provide any evidence related to your suppliers, to the terms of those supply contracts, because they will be important for calculating your costs. And all these need to be very clear, very consistent, and very convincing. What is also important, and this is a reply to many of the questions that we received, at which level these supporting documents should be. Well, this is the second stage. So this is the time once the project gets accepted and you will sign the grant agreement, you will go off to the market. So that's why any supporting documents like letters of support, like memorandum of understanding, terms of agreement, they also need to be signed at appropriate level, whether this is the CEO level or a board level, so that the evaluators are convinced that this is real, this is happening, this is convincing. Again, as with other project maturity sub-criteria, we will have a very deep look into your risk analysis. Therefore, in the business plan, if you follow the template, you will see there is a part addressing the risks. Be very precise and very, very detailed, very comprehensive. And then reflect your major financial risks also in the matrix in section 4.4 of the application form. This is very important in the second stage, that whenever there are issues, those issues are addressed, those issues are well thought through, and you have contingency measures in place to address them in time to ensure that the project is implemented and funded. Next slide, please. Okay, this is a bit more about financial maturity. And again, Gregor will complement this with very detailed and precise information about the financial model, and he will recall also the key issues related to calculation of relevant costs. So we are looking to how credible your business plan is, how well you understand your market, what is the value of the innovation for the project, for the company, what is the competitive position of your project on the market going forward. Important, as I mentioned, is that any financial projections and calculations are realistic, credible, and underpinned with evidence, so that also the evaluators can believe that the numbers are based on credible assumptions. Also focus your presentation on the financial viability with the Innovation Fund grant, whether this is related to internal rate of return. Here, what is important, if your project has a lower internal rate of return, it has to be clear that despite this, the project funders and financiers are keen to go ahead. And you have contingency measures if anything happens to ensure that the project is going ahead. As I said, we have included the financial model summary sheet as the way to present consistently and in comprehensive manner your financials that are also the input to the calculation of relevant costs. This is the minimum requirement, but you may also submit your full financial model if you like. And this should be the financial model of your company for the project. We will be looking to the soundness of your financing plan. So how well are your financing sources covered? So not only identified, but essentially covered to ensure that the project can really be signed off and you will reach financial close. How well have you thought through the steps to reach the financial close? And what is the support and commitment of your shareholders, of your partners to finance and implement the project? And as regards the financial risks, again, we have seen many good presentations in the first stage, but really be as detailed as you can and as critical as you can. Try to find ways to address the key risks, whether they are related to your viability, coming from the difference in the costs or revenues. What happens if the costs or revenues change? How can you mitigate that? Or whether this relates to your financing plan. So what happens if any of the funders steps off the project? How would you address the gap there, and how would you ensure that the project goes ahead? So these are, I would say, the key messages related to the second stage. As I said, similar to the first stage, but much more detailed, much more similar to what any other investor do when they are doing the due diligence assessment of your investment. I hope we have provided the framework for a very good presentation of your projects. So follow very closely the questions in the application form, follow the templates that have been prepared, and be as precise, as credible, as much underpinning evidence as you can. I would stop here and pass the floor to Gregor, who will now walk you through the key elements related to the relevant cost calculation and especially the financial model and the cost efficiency calculation. Thank you.
Good morning, everybody. I'm struggling with activating my video. I don't know if someone can do that remotely for me. But in order not to delay, I will continue with the presentation. So regarding the updates that have been made to the relevant cost methodology, this is a methodology that you all are familiar with. In order to help answer some of the questions that we've received during the process of interacting with you in the first stages and answering some of the questions that were posted. We've tried to provide greater clarity regarding a variety of components of the financial model and relevant cost calculation. And so new terms have been better defined in the glossary now. So as far as CapEx is concerned, construction costs, the site infrastructure, development costs, and importantly, intangible assets. There were a lot of questions around, can certain costs of developing IP be included in the project? And we've been quite specific now in determining what costs can be included in CapEx as regards intangible assets. It's important to note that this is not intended to fund development of ongoing IP that's going to be used in other projects. It has to be done very specifically related to the necessary CapEx at a market-related arm's length price as far as intangible assets are concerned. And it can't result in any leakage in the project at all. As far as revenues are concerned, all revenues generated by the project and operational benefits and external benefits, of course, excluded. Those have been defined more deeply now in the latest set of guidance. And specifically, as far as any feed-in tariffs are concerned, those are now to be taken off the OPEX in the calculation of the relevant costs. And a good example here would be a feed-in tariff, which is an operational amount which is given to a project in the member state to promote the project or to let it get closer to financing. SE++ is probably a good example in the Netherlands of this type of regulatory support program. And the purpose here is so that we don't have any double counting of funding or double funding of a project where two sources of concessional financing are doubled up for the benefit of an applicant. Next slide, please. So the key principles for the relevant costs in the legislation, in the regulation, are that these are additional costs borne by the applicants, and they are as a result of the application of the innovative technology. So it's expected that the innovative technology, of course, will be more expensive, but this must be related to the reduction in emissions. So the application of the technology, obviously, to meet the emission reduction. And I'll come back to this because this is an important point and how the cost efficiency calculation is done. So for most of the projects, and we'll get to the exceptions here, you should be using the levelized cost of producing an output unit with the new technology against whatever the market price is or the reference price. Now, this is the standard default methodology which should be used, and there are exceptions to this. There are fallback options, which are, of course, to use the old reference plant methodology. And in exceptional circumstances where there's no reference scenario at all, there's no market price, you can use the no reference scenario, but this is unlikely to be the case with most projects. Next slide, please. I'm still not sure if I can ask the operator to make my video active. I'm unable to do that, but again, I'll continue. If someone can try and make my video active, that would be great. We've produced a decision tree. This has been mildly updated just to provide further clarity, but effectively it's the same as you've seen previously. The first step is to determine which of the scenarios you should be using. Which methodology is applicable. And the first one is, first of all, is there comparative conventional production? If there's no comparative conventional production, you look at whether the production involves electricity storage, which is a specific case, which has its separate methodology. And if the case is no, then of course the reference scenario can be ignored and you use the no reference scenario methodology. If the case is that electricity storage is involved, of course, you use that levelized cost of storage methodology. Then going back to, is there conventional production? If there's a reference price for the product in the market, if it is replacing a product which has a market price, or indeed it has a market price for what's being produced in a different way, then you can use the reference price benchmark. If there is no reference price whatsoever, you ask the question, is there a product with a model reference plant? In other words, is this the benchmark plant for this type? Can you compare it for conventional production to that of your plant? And then, of course, you've got to ask, are the data available to support that? And if that is the case, then the reference plant methodology would be used. If there are no data available, one has to use the guidance to complete the financial template to meet the data requirements for selecting the reference plant methodology. However, again, just to emphasize that the default technology will be the levelized cost methodology, where you're comparing a unitized cost per unit against a reference market price. Next slide. So the levelized cost is a cost of 1 unit of production over the full lifetime of a project. And it does that by including the financing costs in the total cost of operating and financing the plant. So it provides a flat, single, non-escalating unit cost of production over the lifetime. And this is the methodology that's predominantly used to see how electricity prices for renewables have been reducing over time in the market. But we have adapted this to the model that we're using for calculation of relevant costs. There are slightly different variants of this methodology. The first one is calculating the electricity generation levelized cost of energy, or levelized cost of electricity, which is the cost of producing a megawatt hour of energy. The product manufacturer one we call levelized cost of product, and this is a unit cost for whatever your unit of production is, whatever the single product costs, against a reference price. And then for the storage, using the cost of discharge of a megawatt hour of energy. Next slide, please. So the reference plant methodology then, the existence of a reference plant is important. It has to be the benchmark installation as defined by the ETS regulations on a benchmark installation in the case of industrial products or fossil fuel equivalent for renewable energy or heat in the case of those. And the most important thing in order to use this methodology, if of course there isn't a reference product or price available, and this is the default, this is the fallback position, that this cost data is available. In the absence of this cost data being available, this methodology of course can't be used. And the project capex revenues and the operational benefits are then compared based on the best estimates of the same parameters for the relevant plant using the conventional technology compared with the product and location of the plant in the case of the applicant's project. Next slide. So the no reference plant methodology, this is a last resort methodology. It's not, as I said, expected to be very common, and it's only to be used in situations where there's absolutely no comparable reference plant existing, either in the EU or globally, and that no reference product exists. Here, you're simply providing the relevant costs based on the actual project cost data, and the revenues and operational benefits and OPEX, and then calculating the relevant cost on that basis. Next slide, please. So the key principles for relevant costs in terms of the rules for calculation is we've included some clarification of prices. Now, these assumptions are based on an average price as far as carbon price and allowance assumptions are concerned, which obviously are calculated as a benefit in the case of industrial projects, which have the benefit of receiving allowances for reduction of emissions. And these are based on the average price of 2019 and 2020, which has been approximately 24.81 euros per tonne. And the indexation and inflation assumptions, we had a couple of questions this morning on this. The average indexation of the prices to be used are those of the 2019 and 2020. You will see this in table 4.2, I think it is, in Annex B of the guidance. Now, it's important in our calculation that project finance norms are adhered to in terms of terminal value. So there is the assumption on all of these calculations that there is no terminal value to be associated. So in the calculation of relevant costs, for example, you wouldn't take off the value of received from a terminal amount. And in the reference plant methodology, similarly, there's no terminal value. It is simply just for the time that the costs are being calculated that those OPEX and CAPEX costs are included. There is also no ability within the calculation methodology to claim any write-down or cost of not being able to use technology which has already been funded. So a write-down of an existing technology, losses made on replacement of existing technology because those costs were incurred previously and that hasn't been fully depreciated, that is not allowed in the methodology. Next slide. So what is the levelized cost of methodology? All of you know this, I think, by now. Let's take the LCOE example. This is option 1A. And this applies to electricity or energy production projects. Here, the principles are that you apply the levelized cost methodology to determine a unit cost of your production in your new project. And this basically includes the financing costs by assuming a weighted average cost of capital discounting factor. So what it does then is it calculates a levelized cost by taking the investment cost, the CAPEX, adding the O&M cost and whatever fuel cost, if there is a fuel cost, in some cases there's not. And for both of those, discounting those future cash flows, negative cash flows, against the weighted average cost of capital, which is the combination of the debt and the equity cost of financing. And then this is divided by the amount of units of energy produced, also discounted. And that's discounted to take account of the financing cost, and therefore the total in the calculation with a higher discount rate producing a smaller amount of discounted electricity unit will result in a higher levelized cost. This then is compared against a reference price, which is a price which is currently achievable in the market price. And the difference between these two calculations, of course, or two prices or costs, is that the levelized cost is a levelized non-escalating cost, a unit cost over the lifetime of a project, where the reference price is a price at a point in time in history, which will be escalating over time. So again, you look at the difference between these two prices, and then you multiply that by the discounted number of units over the period of time that the project is operating for, and you get to a relevant cost. Next slide, please. Now, there is one adjustment. Because the regulation states that CAPEX and OPEX and operational benefits over the first 10 years of the project need to be taken into account. And when you calculate a levelized cost over the lifetime of a project, you're including the OPEX, which is post 10 years. So if it's a 20-year project, you're including OPEX, which is included in years 11 to 20. One has to make a slight adjustment to this calculation to take into account of the fact that you shouldn't be, by regulation, actually including those OPEX costs. So the adjustment is made to the calculation by removing that portion which contributes to the levelized unit cost, which is represented by those discounted costs which occur after year 10. And so it's important that this calculation is correct, and the applicant should verify the effect of the NPV on the difference between the OPEX of the project and the conventional technology for the remaining life after 10 years of operation. Now, as with all of these calculations, they're done for simplicity purposes, and the calculations are done to allow a comparable methodology across a number of very different projects. So if we were to provide absolute 100% accuracy in a methodology, it would become inordinately complex. So, of course, there are some minor inaccuracies where projects in a conventional technology might have an enormous amount of operational costs as opposed to CapEx, and the new technology might have a very high CapEx but almost no operational costs. So in the case that the applicant believes that this will be the case, there is the possibility of providing evidence for that, but that must be a highly detailed calculation in order to be justified to move away from the standardized methodology. And the standardized methodology is there to have a unified, comparable calculation across a number of projects. So if there's any diversion from that, just for this adjustment, then that has to be very, very well justified. That being said, because this is based on discounted costs at the very end of the project and it's only operational costs, it generally doesn't have a very material effect. So it's just a point to be made that that can be done, but again, it's probably not going to be material in the calculation. Next slide, please. So the levelized cost methodology of product, very, very similar. You're calculating a unitized non-escalating unit cost. You're comparing it to a reference price in the market, and the calculations are based on exactly the same calculation formula where you are using your weighted average cost to capital to discount the O&M and the ongoing variable costs, and those are then also divided by the discounted number of units produced over a period of time. Next slide, please. So let's look at a hypothetical project example. We need to calculate the discounted cost per unit of production using the Lcop methodology. So the first step is to establish what is the CapEx and OpEx of the project, and we need to know what is the upfront cost of construction, what are the fixed and variable OpEx components for the project lifetime, and what are the number of units we are going to be producing, whatever that unit is, whatever that product is. We check the indexation, which is based on the indexation for our particular country, for starting at the years that we've indicated. Then we also check, are there any carbon allowance benefits? Are there any other market-wide benefits that can be counted against our OPEX? Do we receive any ongoing market-wide subsidy, for example, like the SDE plus, and then the OPEX is reduced by this. Next slide, please. So the example here, very simply, here we have a capacity input, we have a reference product price input. We assume that there's no premium of our product to the price in the market, so we're not producing something that has a market standard better price. So an example might be, let's say, some sort of a bioproduct, which even though it's sold on the market, it's generally accepted that because of its provenance, it receives a higher price. There's no premium here. We're just assuming that that is the same as the reference product price. We have a date of financial close so that we can determine what the construction period is and when our operations start from a revenue point of view. We have a construction cost that we input. And then importantly, we determine what the project lifetime is. And the project lifetime has to accord with what is generally accepted in the market for this sort of project. And in an industrial project, it's usually related to the standard accounting treatment of the depreciation of the assets or the useful asset lifetime. Here we have a production ramp up as well. Does the production take a while to ramp up over a certain amount of years, or in year one is all of 100% of the production produced? And in this case, we're saying yes, it is. Here, our indexation, as an example, is 2% based on inflation rates that we have in the market. Next slide, please. And here we look at, do we receive any operational benefits, any public support or any other benefits? Here, the only benefit is the amount of carbon allowances sold. Here we have a figure in, it's not the correct figure for the carbon price as it stands today, but just for purposes of example, we've put in 25 there. Then we input the operating costs, O&M and other variable costs over time, and that is at today's price. Then those in the calculation are escalated according to the indexation. Then we have a feedstock price, again, a variable cost, and we come to a total. We might have some fixed overheads associated with that, and that's fixed per year. And then we have operating costs in total based on the model forecast, which will give us an amount per year. The other thing that we look is, are there occasional life cycle costs? So, for example, does equipment need to be replaced? Does equipment run out after a certain amount of hours of operation? We have to include that as a life cycle cost amount, so included, as it were, a piece of capex coming in at a later stage. Next slide, please. So the first thing is how many units are forecast to be produced. We input that into the model over the lifetime of the model. We then use the weighted average cost of capital, and we calculate the weighted average cost of capital by calculating the cost of equity. And in industrial projects, that's done either through the the capital asset pricing model, done based on what the cost of equity is in the market for that type of industry. We look at the cost of debt, which is the actual cost of debt. So that would be your base rate plus the margin you expect to get from the bank. And then you get a blended or weighted average cost of capital. Here, in this case, it's 7.33%. We then discount the OPEX and the units produced over the project lifetime using the WACC, our blended cost of capital, or weighted average cost of capital, and then divide the CAPEX plus the present value of the OPEX by the total discounted units produced for what is a levelized cost. In other words, a flat, non-escalating cost of production per unit over the lifetime of the project. Next slide. Then we establish the difference between the reference price, which is a price, not a unitized cost, important to remember that, and we get a difference. Now, the expectation obviously is that the unitized cost of production is going to be more expensive than the reference price. And then we establish the difference between these. Once that difference has been established, we times that by the discounted production over the lifetime of the project, and we then calculate what the levelized cost minus the reference cost is for the full set of production, discounted production units over the lifetime of the project. Next slide. Of course, then we have to make that small adjustment for the OPEX over the 10 years. So that difference then is multiplied, is multiplied by 1 minus the percentage, which is represented by the OPEX after 10 years. So here, after all those calculations, we then come up with a relevant cost, which is 10.8 million euros. We, of course, don't take account of the full relevant cost. We take account of what the eligible amount is, which is 60% of that, and therefore the maximum Innovation Fund grant in this case would be 6.5 million euros approximately. Now, important to note that that is the maximum. So the whole purpose of this calculation is not to calculate the actual amount that you will bid in at, it's just to calculate what is the maximum amount that you would, in theory, be able to apply for. And I'll get to that right at the end of the presentation and just emphasize that point. Next slide, please. So levelized cost of storage, this is a very similar methodology to the other two with a slight difference in that electricity storage revenues differ from country to country. And in certain countries, you do have certain revenue streams, and other countries you don't. Now, those revenue streams will depend on how your unit is set up, what particular market prices and services it can bid into. And therefore, there's no standardized market price for electricity storage. It's done on a country by country and what we call a use case by use case calculation. So this works in exactly the same way as the other methodologies work, except it defines a specific use case for the project. So for the project then defines what is it in fact bidding into as far as the services are concerned. What are those services priced at historically? And then it creates an artificial market price by taking those services, the revenues for those services in a year, divided by the amount of megawatt hours discharged, and gets a comparable market price to what would be a levelized cost of storage price. And the levelized cost of storage then is calculated very similarly to the other methodologies in that it is simply a calculation of a unit cost over the lifetime of the project using the weighted average cost of capital as the discounting factor. So you have a market price or a reference price, which is a price as at today, which will escalate over time, and you compare that against your calculation for levelized cost of storage, which is the capex minus the O&M and the cost of charging, which is your other OPEX cost, over the discounted amount of electricity over the lifetime discharged. Next slide, please. So now we've dealt with the methodologies very briefly. I think most of you are, in fact, familiar with these methodologies, so it was just a refresher. But there is a new component which you wouldn't have seen yet, which is really just to enforce some discipline and commonality across projects to make it, one, easier for reviewers to be able to make sure that they, one, have enough information to evaluate the project and that the evaluation is done on a consistent basis. But it also forces applicants to make sure that they have a standardized and sufficient set of information that can be evaluated. So now there's a requirement to produce what's called a financial model summary sheet. And this is a summary sheet which standardizes the information into a standard set of entries into a template, an Excel template, which is available for download from the Funding and Tenders portal. And these are amounts which will come from your standard financial model, which will be cut and pasted into the standardized template and then will be evaluated on a common basis across all projects. And this does two things. It allows the evaluation to be common. In other words, the same set of evaluation procedures will be done across projects. But the other thing it does is act as a very good checking mechanism just to make sure that the type of information that's expected in the application is actually adhered to. Next slide. So the financial model summary sheet has a number of standard project finance type inputs. It's got the project timing, when the project starts, when it's operational, and when it ends. It has the funding sources, where's the funding coming from, equity, the loans, both senior, junior debt, if that's relevant. it also provides a profit and loss and a set of standardized financial accounts. And this also just checks that things balance in the financial model that has been provided to us. Next slide. So, of course, cash flow statement as well and balance sheet. Again, I talked about balancing items, but those are relatively standardized and laid out in a standard format. It's done on a yearly basis. So if your project is a semi-annual project or your project finance model is doing it on a monthly or quarterly basis, the yearly figures that come out of your financial model will be input into this model. Next slide. So as far as the approaches for applicants, it's very important, as you would normally do in any financial model, that you have a set of inputs which are the only cells which can be changed. You have calculation cells and reference cells, and these should not be changed in the model. So everything which is in yellow, the yellow cells are for inputs by the project applicant, and everything else should be left alone because those are calculated sheets. And any changes that are made in the non-yellow cells will compromise the integrity of the information submitted to us. Next slide. So again, just to go over the process, all the expected funding uses and sources must be inputted. These are both construction and operation. These funding sources should correspond to the total financing package expected to be secured at financial close. So once the project is financed and closed, all funding sources must be included there. And the amount of innovation fund grant that's expected to be dispersed during construction and projected, in other words, that the application is making an application for, should be in line with the project milestones and should be inputted into this model. And this model will then calculate a pre and a post-innovation grant IRR, and this allows for easier evaluation by the expert evaluators. And any grant, this is an important point, any grant that's dispersed prior to construction should be recorded as a reduction in the development cost component of the CapEx in the model. So when inputting this amount of the innovation fund grant, you'll see that there is a space to do that in the model. Next slide. Okay, the next thing is to note that the relevant cost calculation is a very simplified calculation when compared to a standard project model, which will be relatively complex, have a whole lot of different inputs, and have a lot of lines of financial information. The relevant cost calculation is a simplified version of this, but it's very important that the financial model spreadsheet must be consistent. So the inputs that are being put into the relevant cost calculation must be directly related to that information that's inputted into the financial model spreadsheet. And the financial model spreadsheet is the minimum required information. So those must be consistent. You are able to submit a full project financial model alongside the financial model spreadsheet. It's not a requirement, but it might help with the evaluation. If you feel that is the case, you can submit that alongside it. But everything we're provided must follow good practice and be easy to read and reference. It can't be a very complex financial model where inputs and assumptions and calculations are mixed up, where there are lots of references which are difficult to follow. If a project financial model, in addition, is provided, it must be well set out, it must follow good practice, and it must be easy to navigate. So links, of course, between the relevant cost inputs and calculations and the financial model inputs should be marked. And important to note, if you feel that this is too much information, the financial model spreadsheet, or you don't have information, that would probably be an indication of lack of financial maturity. Any project which is asking for a very large amount of money from a concessional funder should have extremely detailed, well elaborated and checked and verified financial information. So please make sure that is the case. If you feel you can submit an application with incomplete financial information. This is obviously compromise your application. You can download the fully developed financial model example as well. There's an example which relates to an energy funding project on a accepted, standardized, open source style financial model spreadsheet. You can look at this, download it as an example of what a project financial model might look like. Next slide, please. Also on the financial model spreadsheet summary sheet, you will see a profit and loss, a balance sheet, cash flow, and IRR analysis, which will come out of that. You can refer to that. If there are any errors in that sheet, you obviously can refer back to where an input hasn't been provided or something has been changed which shouldn't have. Next slide, thank you. Okay, so this is the last slide of the presentation, and this is an important slide in that everything that I've been discussing thus far is to be able to provide evidence of financial maturity and to be able to calculate correctly the relevant cost calculation. And the relevant cost calculation will result, once times by 60%, in what the ceiling is that you can apply for in the innovation fund process. But that ceiling is not exactly what you will end up applying for. It might well be, in order to be more cost effective or be cost competitive, that you will want to reduce the amount to the absolutely necessary amount that gives you a sufficient commercial return for the project to actually happen. And remember, this is a competitive process, and the cost efficiency criterion is evaluated by the relevant costs, or the relevant costs applied for, the applicant's costs applied for, divided by the amount of emission avoidance, so the tons of carbon dioxide avoided. So that calculation will mean that a project which applies absolutely at the ceiling would be less competitive than a project that applies at a lower amount. And this is up to each applicant to decide, but it's important to note that all of these calculations are only to determine what is the ceiling amount, what's the maximum amount that could be applied for. It's not necessarily going to be the amount that is in fact applied for. So thank you very much for your time. We welcome questions. And apologies that for some reason the application didn't allow me to put my camera on. I wasn't able to do that during the presentation. I'm not sure if you were able to see me. I couldn't see myself. But I am here, and thank you very much. That's the end of my presentation.
Yes, thank you very much, Gregor. Indeed, we weren't able to see you, but fortunately, we were able to hear you loud and clear, and this is very important. Thanks to you and Roman for the very detailed presentation. I'm sure I'm not the only one who would like to watch that again, pressing pause and thinking carefully of different aspects. I see we have a lot of questions on Slido, over 550 people watching us. The questions are many. We won't be able to answer all of them now, but what I will try to do is just group them in wider constellations and topics, and we try to provide answers that cover as wider ground as possible. If we don't manage to answer your question today, please don't hesitate to submit it via the Innovation Fund Help Desk, where you'll get a written reply in the usual timeframes. And of course, don't hesitate to watch again the video and the presentations. They'll be made online, available a few days after the event. So if I start with the first group of questions, I would maybe group it around various uncertainties that you flag. So what happens if funding is cancelled before the financial close? And also there is a question which has attracted a lot of likes, stating that contracts cannot be final before grant support is approved. And will letter of intents and memoranda of understanding and high-level estimations be sufficient for the application? Roman, anything we would like to say on that?
Yeah, so for these uncertainties, please take into account that the Innovation Fund will disburse grants upon reaching project milestones. Okay, even though the 40% that we can pay before or after financial close is not related to achieved greenhouse gas emissions, you will always need to reach certain milestones in order to receive those grants. There is obviously a risk that we are taking in case the project is cancelled before reaching financial close. However, you will only be able to receive grants if you meet your particular milestones that can be there before the financial close, such as concluding the FEED study or concluding the drilling in case of a geothermal project. When it comes to the contracts that cannot be final before grant, yes, this is true. But since we are already in the second stage, you should have a very clear and precise indications from your suppliers, from your off-takers, what would be, let's say, the framework contract conditions, so that you can essentially plot the estimates, whether this relates to costs or revenues, into your projections, into your financial modeling. So the more precise you are on those, even though these are still framework conditions, the better. So don't expect that evaluators would be giving high scores if you will not be at least showing what is the framework on these contracts, what are the expectations for our suppliers or off-takers, with many caveats, of course, because these contracts can be finalized only later on.
Thank you, Roman. Another group of questions which I see is quite popular is around the due diligence report, in general documents submitted in the first phase. So about the due diligence reports, can we clarify, are they compulsory? Can previously submitted ones be updated, etc.?
So the due diligence reports are not compulsory. This is at your decision whether you want to submit them or not. If you have them, you are invited to do so. And yes, they can be updated, as you can update your business plan, as you can update your implementation plan or your feasibility study.
Yes, thank you very much. Which then brings me to a bit of group of practicalities of questions. So there are questions: how will the page limit impact the need for more detailed risk assessment? Should supporting documents follow the indicative content in Part B, etc.? So anything we would like to comment on this?
Yes, we have provided a bigger page limit for the second stage. So this has been increased, and you can see this already in the section 8 of the application form. This allows you to provide more information, more profound information in the documentation. So this is already provided, and please be focused on key information. Okay, this is the second stage, so really focus on the information that matters and that builds your story and make it more credible.
Yes, thank you. And then probably the last group of questions, which is quite heterogeneous but very important. It has to deal with various prices and indicators which should be used in the calculations. I see that the most voted question is about the CO2 price, and there are several along these lines. So what about the CO2 price changing over the lifetime of the project? How should we deal with projects using different CO2 prices? So this is one group. Then a second group concerns the reference price. Should it be the production or the sales price? A third indicator is about the cost of reference product increasing over the lifetime of the project, so still a change of an indicator. There is also a question if we can provide an example of an OPEX adjustment. And last but not least, there is a quite concrete question: should the WACC be company-specific, project-specific, general, or what about the WACC? So quite a few indicators, but maybe you or Gregor can quickly answer these ones.
Gregor, can you address those?
Yeah, you might have to remind me of some of the some of the questions. So yeah, as far as the calculations are concerned, a price as set out in the presentation regarding carbon should be included as per the guidelines 2019-2020. I think it was 21.84 that deals with that question. As far as escalation of prices is concerned, again, falling back on the specific inflation and indexation figures which are relevant to your own country. Again, focus on table 4.2 in the guidance document. There was you'll have to remind me of the WACC was the other question. Yeah, as far as which WACC do you use, the WACC should be, depending on the type of project, there are benchmark WACCs for your specific country and for your specific technology if it's related to renewable type, electricity type generation project. And those again are referenced and included in the annex. As far as the WACC for industrial projects is concerned, you have the ability either to use a market-wide or company-specific WACC that must be justified, and that will form part of the justification when an expert model audit is provided. That calculation must be correct. It'll be done based on the capital asset pricing model for the equity calculation. The debt must be the actual debt cost of the project. And because the projects are innovation projects, the equity calculation for the cost of equity has an innovation premium associated with that. And that is either a figure which is determined based on the reference to innovation premiums for smaller company projects, and there is a reference as to where to find that sort of information in the annex. As far as the renewable type electricity projects are concerned, those specific technologies are referenced, so you'll find that in the annex as well. There was one other question, I forget which that was. Perhaps you can remind me, Melina.
Yes, if we can say a little bit more about the change of different indicators and an example of updating the OPEX.
Yes, okay. So I think the question related to the OPEX adjustment. So how does that actually work? So in your calculation of relevant costs, you'll have a figure which would be CapEx. You'll have a figure for OPEX. And using that over the lifetime of your project, you'll divide that by the discounted number of units produced. And that will give you a cost for your unitized or levelized unit cost. So that's that is what you're going to compare against your reference price. Once you've done that and you have the difference between the reference price and the levelized unit cost, that difference then is adjusted. And the adjustment is based on looking at your levelized cost calculation and taking the amount associated with the discounted OPEX for years past year 10. So let's say in a 20-year project, 11 to 20. And let's say that is only 3% of the total levelized cost. Then that difference is adjusted by that 3%. So you times your difference by 97%, and that's the final amount that you use. In some cases, it'll be a little bit bigger. That will represent a bigger amount depending on the extent to which your project is exposed to a high level of OPEX. So in things where you have a fuel component, that's usually the case. Or in the case where OPEX represents a bigger component and the CapEx is relatively low. In most cases, that's not going to be true. The other thing that will affect it is your actual cost of capital. So if if you have a very high cost of capital, that amount is discounted more towards the end of the project, so it'll be a smaller amount. So so that's basically how it would be done. It's a relatively simple calculation, and in most cases, as I said, it's not going to have a material effect on the actual amount.
Great, thank you very much. One question which has attracted a lot of likes, and it is repeated in various forms throughout, is about the criteria for financial audit. Who is allowed to perform this, and are there accountancy and ISO norms to conform to? Roman, would you like to address this?
Yes. Yes, there is a requirement for the audit statement on the relevant costs calculation. This must be done by the external independent auditor, who should audit the correctness of the calculation. And this also includes the confirmation that the inputs to the relevant costs calculation sheets are consistent with the information contained in your financial model summary sheet. And these inputs need to be valid and confirmed by the auditor. The auditor statement must therefore confirm that the relevant costs have been calculated in line with the relevant cost methodology, and that the calculation is correct. This is confirming the integrity of the calculation. The audit statement on the correctness of the calculation should be provided by authorized auditors, so they need to be affiliated to professional audit organizations. And these can be the auditors that already audit the company financials, provided they are external, provided they are independent and affiliated with the professional organizations.
Thank you very much, Roman. We do have a lot of questions, but being mindful also on time and the fact that there are several detailed presentations following, I would suggest we move to the next section. If you feel that your question was not answered or you would like to receive more details, please don't hesitate to submit it also in a more detailed way to the help desk via the CINEA website. So without further ado, I pass the floor to Maria Velkova on degree of innovation and scalability.
Thank you, Melina. So I will present to you now what happens, or what are the differences in second stage criteria, degree of innovation and scalability. So let me see. I've taken control now of the presentation and I hope everything is fine. So the first criterion I want to present to you is degree of innovation. You actually have already completed in first stage you have provided quite a lot of information on why your projects were innovative or are innovative. And actually for those projects that continue to second stage, one thing is certain, they are all considered more than incrementally innovative. So all of the projects are considered innovative. So what changes now in second stage? Why are we looking at this criterion again? Of course, we look at all criteria in second stage, and in degree of innovation, we have slightly reorganized the application forms to allow you to present even more clearly how your project is innovative. So you will have first to explain again the state of the art, or there is a chance that you beef up this explanation, that you're very, very clear on what is the state of the art for your particular technology or set of technologies you are intending to demonstrate. Then in the second section there, in the application form, you have to explain very clearly how your project goes beyond incremental innovation, substantially beyond incremental innovation. Actually, we expect and we know that all the projects that will have the chance to submit applications in second stage are somewhere between intermediate and breakthrough innovation. So we have suggested certain elements you can present, but of course it's up to you how you present the degree of innovation. So this is what you know already, and you had presented in any case here, that there is only a chance to just improve the presentation. The new element, however, is the contribution to other EU policy objectives. So in addition to what is like purely degree of innovation, we look at how the projects are contributing to other EU policy objectives, because the greenhouse gas emission calculation, for example, cannot take into consideration certain impacts which do have actually an impact on greenhouses, greenhouse gases, but are not calculated by you. So, for example, energy efficiency is something that is very, very important, but cannot sufficiently be captured by the calculation of greenhouse gas emission avoidance. So there are three actually elements which we expect that the projects do the best possible. So in terms of energy efficiency, circularity, and use of electricity from renewable energy origin. What does this mean? So projects are expected to apply the best practices and to think of ways to even perform better in terms of energy efficiency, in terms of, for example, using raw materials or waste, or for the projects which are using electricity as an input, because the greenhouse gas emission avoidance calculation, we take their electricity carbon intensity as zero. We need to consider what type of electricity the projects will be using. And there is quite a number of projects using electricity as an input, electrification projects in industry or production of green hydrogen. It is very important that this electricity is indeed from renewable origin. So there are different ways that you can prove that. We're not very prescriptive. But I'm sure that applicants know what are the more secure ways to ensure that there would be additional renewable electricity installed on the grid to compensate for the electricity that will be used by our projects, the projects we will support. So for the first three elements, energy efficiency, circularity, and use of electricity from renewable energy origin, you are expected to do the best possible. So we are not going to give any extra points. On contrary, what can happen is that we can reduce points. On the other hand, there are two other elements, which are the net carbon removals and additional greenhouse gas emission savings, where you could possibly gain points. So let me explain one by one those two elements. So net carbon removals. When we talk about net carbon removals, we quite often think of, for example, combinations of bioenergy and carbon capture and storage, or carbon capture and utilization, but in products which have a long life, like, for example, CCU for building materials. Or, for example, also the combination of direct air capture, which again the same. Because of the greenhouse gas emission methodology, which is specific to the Innovation Fund, there could be other projects that have relative emission avoidance more than 100%. So it's not that all projects with relative emission avoidance with more than 100% are going to lead to true net carbon removal. So it is this specific element will be credited only for those projects which truly are going to lead to net carbon removals, and it's up to applicants, of course, to argue why they are going to deliver or likely to deliver net carbon removals. Then the last element, additional greenhouse gas emission savings, is something actually which was there right from the start. From the first stage, if you want, we have been quite clear that the methodology for greenhouse gas emission avoidance has to be applied, and there are certain boundaries that you're supposed to follow. There are certain emissions that you're not supposed to actually take into consideration, and then they can lead to additional greenhouse gas emission savings. So if we take, for an example, batteries, facility for production of batteries, the calculation is done based on the use of these batteries in real life, for example, in vehicles later on. This is how you do the calculation of greenhouse gas emission savings. However, you may argue that your manufacturing facility for batteries actually is very innovative and can provide additional greenhouse gas emission savings. Normally, this is not part of the calculation, and this is the chance for such projects, for example, to do an additional or separate calculation of these greenhouse gas emission savings and to present it, and this can be credited under degree of innovation, i.e. here. So these two last elements, net carbon removals and additional greenhouse gas emission savings, they have to be substantiated with claims, with calculations integrated in separate tabs in the greenhouse gas emission Excel sheet. In fact, actually, if you do have claims which can be calculated under energy efficiency and circularity, we have also provided a specific tab where you can calculate and present those savings. In fact, all of those are under tab degree of innovation in the calculation tool, and Laura is going to explain a little bit more later on that. So I move to scalability because we really don't have much time and there's so much to say. So scalability is entirely new criterion now in second stage. Why, of course, you know why we are concerned with scalability. We want to support projects which have potential not only to reduce emissions on the project site, but actually have a potential to be replicated and contribute to our objectives for climate neutrality. So widely applicable technologies, we're interested in widely applicable technologies. And for scalability, there are three sub-criteria. The first one is the scalability at the project level and the regional economy impact. This sub-criterion is perhaps the easiest for projects because here you have the potential, well, you have the chance to explain how the project can expand first and foremost on the project side or on other sides of the company, for example. Then you know what is happening at the regional level. What would be the impact of your project on jobs, on economic added value created at the level of the region. And this is the chance to explain, this is the part where you can explain this. In addition, we, under this sub-criterion, we consider also the activities that the project is going to undertake for knowledge sharing. And I'm going to explain this on separate slides later on. Then the second sub-criterion is the sector impact. What do we mean by sector impact? We mean how is the technology likely, or the technology of the project likely to have an impact on the whole sector. So, for example, if you're working on a new technology in the steel sector, how is this technology going to be taken by all the companies in the steel sector? So this, of course, is a bit hard perhaps to imagine, but you still need to think of credible ways to demonstrate that your technology can be widespreadly applied in the sector, in your sector. What are here's the chance actually to explain what are the expected cost reductions, because the penetration of technology, of course, will very much depend on the costs of this new technology. And if there are any resource constraints linked to your technology, you have to explain them and to explain how they can be overcome in the future. The third sub-criterion is to do with economy-wide scalability, extent to which the technology of the project can be applied across the economy. So here we're not talking anymore about the sector, but some technologies can be applied in other sectors economy-wide. And what we want to look here also is the potential to create new value chains or reinforce existing ones. So new projects and new technologies will have an impact on, for example, suppliers of the technology or of the raw materials. So how are you going, your project is going to have an impact on those new value chains or creation or reinforcing of existing ones. And then this also linked to that is the contribution to development of strategic autonomy in industrial supply chains. So for all of these sub-criteria, we ask you actually to think short and medium term, so mostly immediately as a result of the project, but also long-term impacts. And the scalability is actually what we want to know is really the long-term impacts. So we have actually provided in the greenhouse gas emission calculation tool, also a tab which is called Scalability, and wherever it is possible to substantiate your claims with calculation, please do that in this calculation tool. This will help the evaluators and it will help your case. It will help you argue your case. So I'm moving now to the knowledge sharing, and just to remind you once again why we're insisting so much on knowledge sharing. Knowledge sharing is aimed to de-risk the innovative projects, the innovative low carbon technologies you will be demonstrating with regard to wide-scale commercialization. It is aimed to accelerate deployment, and it is aimed at increasing the undertaking and confidence of these technologies also by the wider public. That's why we're so much insisting on knowledge sharing, of course also on communication. But communication sometimes somehow comes easier to projects than knowledge sharing. And the last objective, of course, is the maintenance of competitive market for the post-demonstration deployment of technologies. Projects, the successful projects will be receiving very big and important public support, and it is important that important also part of the knowledge that they are gathering through this demonstration is shared. Of course, it is important that this information that is shared doesn't concern commercially sensitive elements, and we are going to ensure this throughout the process. So what are the knowledge sharing activities that will take place? There will be the beneficiaries, so you, the applicants, the current applicants, which will become in the future beneficiaries, will have the obligation to provide knowledge sharing reports after or before, actually, after every payment milestone. So the knowledge sharing obligation is linked to payments. On the other hand, you have a chance also to write this knowledge sharing plan, which we are requesting in the application form. And this knowledge sharing plan is your own activities. What are you planning to do on your own in addition to the obligatory knowledge sharing reporting? For example, you can think of having a visitor center. You can think of organizing specific workshops for other companies which are interested in your technology. These are just examples. And you have to explain all this in the knowledge sharing plan that is a mandatory actually document and will be evaluated under scalability, as I said before. Of course, you are expected to do also proactive and systematic public communication. On the other hand, SINEIR, the executive agency, is going to take care of overall information, communication and promotion actions, but they're also going to organize workshops which regroup different beneficiaries, so different successful projects, and where they can exchange information at different levels. So there will be closed door events and open door events. The closed door events will be actually the events where you can share interesting outcomes of the projects between projects of the same type. We had, I just want to remind here that we had a workshop on the 26th of February, which all the information from this workshop on knowledge sharing is available on our website. And you can remind yourself of what we're planning to do with knowledge sharing through this workshop, the presentations and the recording. So, what I already kind of said, all that is knowledge sharing in practice, but just to repeat again, on the website, on the funding and tenders portal, if you follow this link, we will make these presentations available. If you follow the link, but of course going directly on the funding and tenders portal, you will find the draft knowledge sharing template. So this template is given only as an example of what beneficiaries are going to report on, depending on in which sector they are applying for. So we have given quite detailed examples for energy intensive industries, for renewables, for hydrogen, for most sectors. You are not expected to complete this template at the moment, at the time of the application. The first time this will be completed by beneficiaries will be with the first request for payment, as I already said. But it is very important for you as an applicant to understand what will be expected from you in terms of knowledge sharing reporting. And this will allow you to create your own knowledge sharing plan, which builds on, so it is additional to the obligatory knowledge sharing reporting requirements, which you can see in the template. So I hope all that was clear. Oops, sorry. And we move to the next slide, if I can. And
Yes, thank you very much, Maria, and thanks very much to everyone submitting questions on Slido, and also there were some questions on knowledge sharing received before. I think we clarified very well about the template, what is compulsory, what is not, what is submitted at each stage. Indeed, the dedicated event on knowledge sharing is also quite useful to watch, so please don't hesitate. And as always, if you have concrete questions, you can always use the Innovation Fund Help Desk. The questions from the relevant costs and cost efficiency section have disappeared from Slido, but do not worry, they are not lost. All the questions you have asked on Slido and all the comments are being saved and are not lost, and we try to look through them and to see whether they can inspire us for frequently asked questions to be published, or what is the general considerations of applicants. We cannot answer Slido questions in writing after the event. We try to do that during the event. If you need the written and detailed answer, again, the channel is the help desk. Just on scalability, Maria, if we can cover a little bit the questions. There is a question whether only Europe should be considered or also worldwide, for example, concerning experts. And how should the regional economy and the sectoral level be scoped in the scalability criterion? If we can answer on this before moving to greenhouse gases, I think it will be great. Thank you.
Yes, thank you, Melina, and very good questions indeed. So first, it is up to the applicant to scope the regional economy, because the regional economy would be quite different depending on where exactly you are situated. So it is entirely up to the applicant to explain what is the region that the project will have an impact on. But basically, this is it. In fact, the impact related to the region depends on the project. Then the sector level, I believe I explained, is the specific sector you are applying in, and you have selected actually whether it's hydrogen or CCS or, for example, steel. This is the sector impacts we are looking for. Now, the question on EU or global impact is also very important, and to the extent that is possible, when you're talking about the sector level and economy level impact, if it is possible at all, I would the applicants should actually explain possible EU impacts and possible global impacts. This is not an obligation and not necessarily the case for all projects, but some of the sectors by their nature are quite global sectors, and it is expected, I mean, a lot of our applicants are actually global companies, so we're expecting that the good technologies that they are developing will be replicated also globally. So it is here a chance for you to argue if this is the case, and of course it will be our evaluators which will deem whether this is credible or not. So I think I explained enough on the knowledge sharing plan and template.
Yes, absolutely. Thank you very much, Maria. Also, being mindful of time, I suggest that we pass the floor to Laura Pereira for the presentation on the greenhouse gas emissions. Thank you.
Hello, everyone. Can you hear me well? So good morning. I'm Laura Pereira, and I'll be briefing you on what changes in the second stage to the methodologies that feed into the 2 JG emissions avoidance criterion. And also we will introduce you to the additions to the documentation that have been made available for you at this point. At the end, me and my colleagues Rossio and Mikkel from the GRC and also Jakob from Haufer will be available to respond to any questions you have that haven't been addressed already by the presentation. So yes, thank you. I will skip the detailed recap of the methodologies, but the overall concepts remain the same. I mean, for all projects, absolute emissions avoidance will be equal to the emissions that would occur in the absence of the project, which we called reference scenario, minus the emissions that occur due to the project activity, which we call project emissions. And then the relative emissions avoidance represent somehow how much of the reduction potential that you leverage has been leveraged by the project and is calculated dividing the absolute emissions avoidance by the reference emissions of their principal product. And we'll talk about that a bit later. Next slide, please. So the difference is that in the second stage, some of the project emissions that could be disregarded in the first stage will have to be included in the calculations. So here you have the equations to the different sectors that you have applied in the first stage. And I assume that you are now very familiar with those. So I won't go through each of these parameters, detailing what's within that. Instead, I will focus on what changed in the second stage. So if you could change slide. The changes that must be added in this new submission are highlighted in red, yes, in this slide. So for energy-intensive industries, some inputs that had been disregarded in the first stage will now have to be included if the emissions attributed to them exceed 5% of total emissions related to the project, whereas before the filter was 10%. So now we have a larger number of emission sources that you need to account for. For CCS, there are no changes to methodology. However, I would suggest that you revisit your applications and to ensure that data remains applicable and that your assumptions are sufficiently robust. I remind you, and everyone remind you throughout the presentation, that this is still a very competitive round, and you want to make sure your project doesn't get rejected because you calculated something incorrect or because you haven't backed with robust evidence. So please do revisit all your assumptions. Then for energy, a renewable energy production project, emissions that shall now be part of the calculations are on-site emissions for all projects and leakage emissions just for geothermal plants. And the calculations are quite simple. You have amount of fuel and then apply emission factors that have been made available, are provided to all cases. The challenge here is how to forecast the amount of fuel that your project will consume in both stationary and mobile sources, because this is these are not projects that are running, so everything will need to be forecasted. So make sure you spell out your assumptions and provide reference on how these have been estimated and defined. And the same apply to energy storage projects, which will now have to deduct emission from vehicles and stationary machinery as well. So next slide, please. Here on the Annex C, we have also done some improvements to the text to provide more clarity in points where we received more questions, which made us realize that perhaps they weren't so clear. The text wasn't much clear on this point. This was particularly important to projects involving manufacturing of components that will be used in energy storage and renewable facilities. I'm not going through all of them, as this slide will be made available for you, as well as the iteration of Annex C. The only point I would like to emphasize is the update of the ETS benchmarks reference. If you have used ETS benchmark as your reference, most likely energy-intensive industries, please make sure you update accordingly. Next slide. Well, a piece of good news is that we are now providing a template for energy-intensive projects to estimate their emissions, which were available only for other sectors in the first stage. And we have also added new tabs to make your submission more robust. We thought these would be helpful based on common mistake observed across the application, as well as the best practice observed. So I'll briefly go through these, but it's worth to spend some time getting familiar with these new tabs, with the tools which are already available at the Funding and Tenders portal. Next slide. So this is just a screenshot of the energy-intensive industry tool. We really encourage all applicants to adopt this new template in the second stage, rather than just updating, refreshing, and resubmitting the Excel that was submitted in the first stage. And you will see that the efforts to transfer these figures to the new template are minor in comparison to the benefits of using it. And will certainly help you make your entire submission more traceable and more accurate. These two also embed CTS benchmarks and the emission factors that you have to use in the reference scenario. For instance, if you produce fuel, so examples of fossil fuel comparators, emission factors, these are all embedded in the tool. Next slide. So this tab is the summary tab. Yes, this one. So for those already using the tool provided, you may recall that we had a tab summarizing the calculations to inform the two GHG emission avoidance criteria, the absolute and relative emissions avoidance. Even with that, we've observed some inconsistencies between the figures that were in the tool and those that were in the form. So we've tried to make it a bit more straightforward and have also added to the list what indicators that shall now be provided in the new Form C and also for knowledge sharing purposes that Maria already briefed you. But other than that, no major changes to this tab. Next slide. So the tabs for calculation of reference and project emissions remain roughly the same. What we try to improve is the part related to data traceability. We have added extra columns that you can use to describe how data is gathered, how it's internally checked, who validates, and where it's stored. This will help applicants, yourselves, ensure the memory of the calculation isn't lost with changes in personnel. And we know that this happens often. So, and these data traceability columns will also serve as a starting point for your monitoring plan. And of course, if you think you need more room to describe that, but here we try to make sure that this is all sourced in the same Excel sheet. But if you need more room, please feel free to add an extra tab and add appendixes to it. So you can, it's just a starting point, you can build on that. And next slide. Yeah, on the assumptions, this is a new tab. I know we have emphasized since the beginning the importance of documenting and referencing all the assumptions adopted, but we still have received several applications with those already embedded in the calculations or scattered across the Excels. Some were informed just in the Form B, so evaluator would have to try pick and match. Or would spend much more time trying to figure out where data came from or refers to. So to ensure a more efficient evaluation, we have created a separate tab that you shall use to document quantitative and qualitative assumptions used to project consumption, production, or whatever whichever primary data, secondary data you're using. Next slide. So I've been mentioning common mistakes that we spotted and the best practice that we observed and how this has helped us build these new additions to the tool. But then we thought that it would be useful to share with you all of those so that to enable you to self-check whether you are following these best practices and as a result, making your application more robust. I reiterate, this is still a very competitive round, so you don't want to reduce your chances because of silly mistakes or not so silly mistakes. So using the best practice to compare your project will be a good way to sense check that. And next slide. So here is the full list. It's a bit squeezed, but you will receive this through the tools and also in the slide deck. And the best practice they're presented in the format of a question, so you can compare. Like, have you done this, this, and that? Yes, I did. So that you can tick the boxes to compare against what you did in your application. One common mistake that we hope this checklist will help avoiding is the miscalculation of reference emissions for energy-intensive industries projects. Emissions from non-principal products produced in the project scenario should be treated only in the project scenario, and no changes is required in the reference scenario. So if one add those emissions to the reference emissions, we'll have a problem when calculating absolute and relative emissions avoidance, because these reference emissions are distorted and are using the denominator of the relative emissions. And this could lead, for instance, to projects exceeding 100% of relative emissions avoidance, which we observed in some cases and weren't necessarily correct. So this is one of the things that we hope you can spot whether you're doing the correct way or not. Again, I won't go through this as we don't have much time. We prefer to leave more room to the questions and to the other presentations, but feel free to get back to us if you have any questions on that. Then the next slide. So another useful addition to the tools are the examples. So in stage one, we've presented a series of hypothetical calculations during the webinars that we took to illustrate how each sector would have to estimate emissions avoidance or the bottlenecks of each one. So for the second stage, we thought it would be more useful to place these examples directly in the tool to illustrate the calculations, to illustrate how the tool shall be used, and also because you can then consult in your own time, because during the webinars, you are not necessarily ready to understand what your questions will be when you start to calculate. So hopefully this will provide more clarity for you. But of course, the help desk will still be available for if you face any challenges when estimating your emissions. We have prepared 3 examples for energy-intensive industries, which are green hydrogen, e-fuels, and methanol. For CCS, we've chosen a direct air capture project. For renewables, we have a production facility project. And for energy storage, the example considering storing hydrogen into a liquid organic hydrogen carrier. Next slide, please. So Maria have talked about these 2 criteria, and that we thought would be a good idea to merge this to the tool. So because these 2 criteria, they also comprise some aspects related to GHG emissions or energy efficiency, material, circular economy, as Maria discussed. So we thought you would benefit to have them documented in the same place, so that you can eventually link data when calculating. If the data that you will use in additional savings is already mentioned for the GHG emissions avoidance, perhaps you can benefit from an emission factors as well. So we want to make sure these are all in the same place. So with that in mind, we've created 2 tabs, and will be particularly useful for those projects with GHG savings that goes beyond the boundaries defined in the Innovation Fund methodologies. So as Maria already mentioned, we have received several applications where these extra savings have been added to the absolute emissions, even though we spell out what was the scope that should be in, and this is incorrect. So we want to avoid the same to occur in stage 2, but otherwise the project may be rejected just for a misunderstanding. So, but please note that these tabs cover only part of what you must submit under the degree of innovation and scalability criteria. There are other aspects of this criteria that you will have to address separately that are not necessarily quantitative or not necessarily related to the GHG. So, and and you can also expand on to the tool to serve your specific case. They are not, if you think that that's missing something, please feel free to expand on that. Yes, thank you. So my final slide is on the third-party verification, which triggered a number of help desk questions. I just want to clarify that a third-party verification goes beyond the review of the conversion from operational data to tons of CO2. An accredited verifier should also secure that the project boundaries that are adequate and in line with the Innovation Fund methodology. They should assess the accuracy and completeness of the data used to develop the emissions results in each year's projections. They should check how robust and reliable are your assumptions and the conversion factors that have been applied if they were not provided in the tool. And of course, an accredited verifier would also review your monitoring, your QA/QC planning, and check whether the results reported accurately reflect those calculated. Surprisingly, that was not the case for all applications. And of course, the SINEA evaluators do review the quality of the assumptions, but they don't drill down the assumptions to the source. I mean, up to the invoices or SAP reports, we have not reviewed this during the evaluations. So the third-party verification is the way we found to ensure that you are competing against projects that have used realistic assumptions, and that these assumptions are backed with robust evidence. Because you can inflate your absolute emissions avoidance and benefit from that, but if you don't back, how do you a project may lose points to one that haven't been backed. So we don't want this to happen. And of course, we appreciate it entails a cost that some applicants might not be willing to spend without being sure that they will be selected. But certification, it shouldn't take more than 2 days to be completed, and could it doesn't require site visits. It could be done entirely remotely through desktop reviews and phone interviews. So if you need to estimate how much effort, the level of effort involved, it shouldn't be the similar of a greenhouse gas inventory audit. This is much more oriented to a project. Well, and with that, I finish my slides, and we'll be here available to your questions.
Yes, thank you very much, Laura and Maria, for the detailed presentation. I think this is one more presentation that needs to be watched, pressing the pause button, looking into documents and carefully reviewing things. But as our viewers can see, we have put a lot of effort in trying to simplify and consolidate and link the different elements of the application concerning greenhouse gas emissions, to provide more examples, to streamline the templates. So we hope this is really, really helpful for applicants. I would like to thank everyone for the many questions asked on Slido. The one that has attracted most likes is concerning the requirements for the verification, but I think Laura explained this in quite some detail, so maybe we don't dwell on it. There was also a question whether we consider a webinar on greenhouse gas emissions specifically. Of course, we are happy to see what questions will be submitted to the help desk, and whether from these questions a more generic webinar can be derived so we can answer meaningfully. But so far, our assessment is that it is possibly better for applicants to submit their questions in detail to the help desk so they can be analyzed and answered. So for the time being, we're not planning a webinar on greenhouse gas emissions. Maria, Laura, maybe there are a few questions that we could answer before moving to the next session. So there is a question on greenhouse gas monitoring and whether the monitoring period can be extended from the 10 years and by how much. So Maria or Laura, would you like to address this?
Yes, I can address this. In fact, not. So we have fixed the monitoring period for 10 years. I mean, we don't, of course, projects can continue, and we actually expect that projects will have a longer lifetime, but 10 years is considered sufficient for any technology to be stable. Even after the first 3-4 years, this would be the expectation. So you can, in more exceptional circumstances, request a short period, but not a longer period.
Thank you very much. And there is another question, which is about guaranteed access to geological storage. Is it needed, so it should be added to the calculations or not?
Well, you don't need to have the access ensured right from the beginning, but at some point at financial close, we would expect that this is guaranteed. Of course, you would be able to add it in the calculation. In fact, we have an expectation that all projects that are concerned with CO2 capture will have a credible case for utilization or storage of all of the CO2 that will be captured. And this will, of course, be considered also under project maturity.
Thank you very much. One other question is about the power purchase agreement for renewable energy or alternative contracts for renewable energy supply. Are they mandatory to be submitted at financial close?
Well, it all depends on what the project is intending to do. Indeed, if the project is intending to have a power purchase agreement, and of course it will depend at which point of time this electricity, well, the power purchase agreement will kick in. So at financial close, it may already be possible to actually demonstrate that the contract is signed. It could be that in some projects this is foreseen for later on. So it all depends on the strategy of the project.
Okay, great. Thank you very much, Maria. Maybe one last question, which also attracted quite some comments. Let me see if I can find it. No, sorry. I think we have answered it. So, being mindful, or Maria, would you have any more comments you would like to make?
Well, I just wanted to say that we see indeed a lot of interesting questions, but which shows actually that some of those questions may be coming not from applicants which have already applied, but future applicants, and this is really positive. But I think most of the answers actually you will find by reading the methodology. And if you are indeed an applicant, we invited to second stage and cannot find the answer, please submit the question in the help desk and we will make our best to answer it.
Yes, indeed. So maybe without further ado, we pass to the one before last session of today's webinar. So the presentation by Robert Goodchild from CINEA on the second stage application process and application form. So Robert, the floor is yours.
Thank you very much, Melina. Good afternoon, everybody. I'm going to just make a brief presentation about the application process and the application forms. I'm going to talk about three things, I hope. Yeah, these are the three things. I'm going to where to apply, the application forms themselves, part A, part B, part C, and just a few tips that we would ask you to remember when you're completing them. So it's very simple. For where you apply, it's through the Funding and Tenders portal. The applicants who were successful at the first stage have all been sent a link to how to apply and to ensure that it's only those 70 who can apply. So if you're watching this and you haven't been successful, or you're thinking about doing it for the future, then you won't have received this link, so you won't be able to apply. So it's in the Funding and Tenders portal. Now, When you're in the funding and tenders portal, there are lots of ways that you can get help. And you'll see here on the slide, it shows you that you can ask questions if you want to on the sort of the content or on the IT. So you've got plenty of opportunities to get the assistance that you need to enable you to fill this in. Now moving on to the forms. The forms have a part A, a part B and part C. The part A is very similar to what you had in the first stage call. It's additional and has greenhouse gas indicators there. The part B, this is limited to 70 pages. It incorporates the new award criteria, so scalability and cost efficiency, and it wants information on the particular work packages, and I'll come on to those in a minute. This part, so the part B, has to be prepared outside the portal and then uploaded into the portal. You don't complete it online. So I'm going to concentrate now on the bits on the part B. So there is a new part, obviously, which is asking you to explain any changes you're making to the proposal compared to the first stage. And I want to be clear here that some changes are acceptable and some changes are not acceptable. So giving you examples of acceptable changes. So obviously if your project is advanced between when you submitted it back in December, at the end of October and now, or when you submit it, then it's logical you update your implementation plan because of this. Similarly, the business plan could have changed. For example, due to market evolution or to the changes in the regulatory framework. And you may have had the opportunity to have a more detailed or advanced feasibility study or due diligence report. So these are things that you can change from the first stage proposal that you submitted. But the things that you shouldn't be changing, it's whether it's something that's very fundamental to what you're actually intending to do in the project. So, for example, if you are wanting to change the technological solution that you proposed in the first stage, this isn't really possible. So, because it would call into question the assessment that the evaluators made at the first stage with your proposal. Similarly, you can't have a change in the EU contribution that you request by more than 50%. So that gives you an idea of what's an acceptable change and unacceptable change. The important thing is to explain here very clearly what the changes are. Be transparent about it and explain why those changes have been made. So you'll see there are further parts that have to be completed. The first part of these is related to the selection criteria and technical scope of the proposal. So I list them here. These will be examined by the evaluators. The financial capacity will also be looked at in more detail if you're successful in being asked to prepare a grant with SINEA. So we will look at that in more detail later as well. Then on the award, this next part is on the award criteria, and you've already had lots of presentations on that. Again, the important thing is to explain very clearly and as simply as you can, so that it's easy for the evaluators to get the information that they need out of the proposal to make their assessment. So moving on to the part on the work packages. So there's a template for work packages which we want you to use. The way the grant disbursement works is that you will get paid when you complete a work package. So the basic message is that if you want to be paid at a certain point, you need to make sure there is a work package that will be completed by that point. And it should ideally be a self-contained work package. I'll come onto this in a minute in a bit more detail and show you an example of the type of planning procedure. Then of course, the payment that you ask for when you complete the work package needs to be proportionate to the work you're intending to do. And of course, evaluators will look at that. We don't want you just asking for lots of money because it would be nice to have lots of money early in the project. It has to be proportionate to what you're actually going to be doing in that work package. You also need to provide sufficient information that will allow the work package and the project overall to be monitored well and managed well. And the experts will typically look at this quite carefully. And I'll come on to the next point in a minute, which is that after the entry into operation, the reporting has to be annual. And this means effectively you need to have one work package per year. I'll now move on to this next slide, which shows this hopefully in more detail. It's separated into the three different phases of the project: the financial close phase, the entry operation phase, and the operation phase. We give you an example here of potential work packages. So, for example, you may need in the first couple of years to undertake some technical studies, and then when they're completed, that fits nicely at the end of a work package. Therefore, at that stage, you could expect to want to have a payment. You then also may need to do, during the financial close phase, some preparatory work. I mean, it could be drilling, it could be something else. And in that, when that's finished, that's a work package, then you would say, yes, that's finished, and then you would be paid. Moving on to the entry into operation, you could do it in terms of your construction annually if you wanted, but you could also pick different periods for this. But then when you move on to the operations phase, then, as I just said earlier, it is annual work packages, okay? That's the way we expect you to structure it. But again, the basic message is you have the payments will be linked to the completion of work packages. Therefore, if you feel that you're going to need a payment for a particular time, there has to be a work package that when it ends, there can be a payment. So in the part B, there's also a lot of documents that you'll need to supply. I've listed them here. I'm not going to go through them, but just bear in mind that they are mandatory, a lot of them. And therefore, if you don't submit them with your application, then there's a risk that your application will be declared ineligible, which means that it won't actually be assessed by evaluators. And that's obviously going to be very frustrating, not just for you, but also for us, given that we've been through this process of the first stage application. So really ensure that you've got all these mandatory documents. There are also some optional ones that you can use to further substantiate your proposal. Then on the page limit, I think it's important that you bear this in mind. I said that there's a limit of 70 pages for the part B, and then for the 4 annexes that we put abbreviated here, so that's the feasibility study, the business plan, the project implementation plan, and the knowledge sharing plan, there is a maximum of 200 pages for those. And if you use more than that, then the system will cut automatically the pages at the end, and they won't be given to evaluators. And therefore, the evaluators are likely to assess those documents as being incomplete. And of course, that's likely to have a negative effect on your proposal's chances of being selected. There is also a part C that you're going to have to complete. And in contrast to the part B, where you have to download the form and fill it in and then upload it into the system, this has to be filled in online, this part C. We would ask that you really ensure that information that you insert here is coherent and consistent with the information that you have put in other parts of the application. However, if we or the experts see that there are contradictions, we will use the information in part B as taking precedence over this information. So let's be absolutely clear about that. Now, this is a form. There are mandatory fields in it. So you won't be able to submit your proposal if you don't fill out these mandatory fields. And I would really urge you to start completing this information as soon as possible. Just imagine yourself on the closure date trying to submit, and the system says you can't submit because you haven't filled out these fields, and because of that you missed the deadline. It would be extremely frustrating, and I would be very sorry for you if you did that. But just so please start completing all this information early. Then just some basic tips. These will seem very straightforward, but I think it's worth saying them again. So first, obviously, read all the documents. There is a lot of documentation. There's a lot of information, but please read it carefully. Understand what we're asking you to do, and if you read it all well in advance and you still have questions, we've shown you the different ways that you can get answers to your questions. We'd ask that you submit well in advance of the deadline. Now, the system is set up in a way that you can submit in advance of the deadline, and then if you want to adapt what you've submitted, you can do that up until the actual call deadline. So there is no reason why you should be leaving it to the last minute. You can complete parts of the proposal well in advance, and we would really urge you to do that. I realise it's difficult often, and some people need the pressure for a deadline, but just imagine if there's an issue which prevents you from being able to submit. It would be extremely frustrating for you, and obviously difficult to justify to your management why you missed it, because the deadline that we've set is strict. On the part B, experience shows in dealing with evaluations that it's the clarity of the information that is more important than the quantity of information. The experts have a lot of information to get through, and they have a limited amount of time to access it. The clearer that you can make it, the less effort that the experts have to expend to get it, generally the better mood they will be in, and they will obviously be more well disposed towards your project. So make sure that you focus on the clarity of the information and not on the quantity of the information. Experts also get frustrated if they can't find information in annexes, when things are referred to. So make sure when you're doing cross-references that they are clear and they're to the right place, the right annexes. Experts also get annoyed, and it undermines the credibility of your proposal if information in different documents is inconsistent. They then think, well, does the applicant really know what they're doing? Have they thought this through? Have they really checked it? So it's important that you ensure the consistency. And then finally, for the part B, use the requested font size. This is an obligation, and it's one of the things that my team will be checking when the proposals are submitted. Because clearly, if you decide to use a font size that is smaller, then you can pack in more information. It's not necessarily a good idea, as I said before, but then you could be at an unfair advantage compared to other proposals. So use that font size, and that's it. That should be all you use. Respect the page limits. Again, that's important because, as I've explained, the evaluators will simply not be given the information that you include in the excess pages. And then the final tip is to consult the frequently asked questions in the funding and tenders portal. Here's some links to the where you can watch the information on the application process from the previous, the first stage of the large-scale call. And here are also some links that you can use if you want to get further support. There we are. That's it. Thank you very much for listening.
Thank you very much, Robert, for the clear presentation and the very useful practical tips indeed. I think they're good advice to follow to prevent a frustration of applicants. We see quite a few questions on Slido. A lot of them you have addressed in your presentation, but I will ask maybe just a few. So you covered, I think, where is Form C and what is Form C. There has been a question that a footnote 28 is missing. I think we're addressing that, right?
Right. So I think my understanding is it is in the process of being updated if it hasn't been updated already. So yes, it will be put in.
Great. There is also a question: where can applicants find the declaration of honor, and where can they submit that?
Okay, so the declaration of honor is not something that needs to be submitted at this stage. Apparently, this is something that is important when we get to the signing of the grant agreements. Okay, so that's when it's important, because that's when everybody in the consortium, if there is one, or the applicant needs to basically swear that all the information that they have put in the grant agreement is true.
Yeah. And speaking of subcontractors, there is a question whether they need to be indicated with their PIC numbers, etc., in Form A already now.
That I need to get back on. I don't know the answer to that offhand, I'm afraid.
Okay. Then maybe it's a question which could be resubmitted to the help desk, or when the applicant starts filling in the template, if it's compulsory, it will just pop up as an error if not. Then there was an interesting question about the changes to the documents which have been submitted in phase 1 and are resubmitted in phase 2, whether these changes have to be highlighted or how they should be indicated.
The important thing is during my presentation I said that there's a particular part in the application form where they need to explain what the changes are. And I think that's where we need to concentrate on the key changes. So I would say that you really need to do it there rather than in each of the supporting documents. I think it could get very messy if you were to do that. So make sure it's absolutely clear what the changes are so the evaluators can assess whether there has been a significant change or not.
Super. Thank you very much. That's very clear, because it can be also a lot of work to do it in two places and can lead to confusion clearly. There is also a question whether complete CVs will be required. For example, 1 page for each person of the project, or is a short paragraph with the qualifications of each person enough?
I think the important thing is that they have to demonstrate that these are the competent people who can do the work. This is what we're into. We don't want pages and pages of information here. So I think it's really for each of the applicants to judge this.
Okay, thank you very much. Then I think there are a few more questions on the page limits and all that which you clarified. So without further ado, maybe I would thank you for your presentation and would pass the floor to Christian Holzleitner for his conclusions.
Okay, thanks, Melina. Thanks, Robert, and also to all the other colleagues for 2 very packed hours. I will not keep you much longer, but I want to thank you for the high numbers that you turned up. So on slide we had more than 650 active people. So that's amazing. We are very happy about that huge interest. In terms of following steps, please use the help desk for all your specific questions. Please have a look at the available documentation in the call text, but maybe you also want to check out some of our previous webinars, like on the greenhouse gas emission avoidance that we did for the first stage. So if you have some more basic question, you want to refresh that. Also on the Klima website, there's lots and lots of materials. And we will come back on the 28th of April. As I said, a bit of a bigger picture: who applied, which technologies, and also the outlook to the launch of the second calls, both for large scale and small scale projects. So we plan to a question of Austria. Yes, we definitely want to launch the calls in the fourth quarter. So really our ambition is to have calls for small scale projects and large scale projects every year, and that we really get into this routine that we offer a call every year. Okay, so I'm already very much looking forward to meeting you again on the 28th of April. In the meantime, keep safe. Thanks so much for all your interest, and all the best, all the luck for preparing now your applications for the second stage of our first call. Thank you so much, and have a nice day. Bye.